And what other benefits can the exchange bring? It can bring, for example, the generation of an additional source of revenue for hosting states. For example, the stock exchange and the various commodity exchanges that operate within this capital, they pay vast sums of taxation to the government every year. So obviously, there's a vested interest of the government to have them around and so forth. And obviously, the generation of multi-sector employment in addition to augmenting the financial services industry. For example, commission rates that the brokerage firms have been able to charge since 1975, since May Day 1975, with the abolition of fixed commissions. They've been on an ever-dwindling slope. So you've had a situation where the investment banking community has tried to overcome the fall in commissions by stepping up what we call proprietary trading, risk trading and so forth, which is part of the reason why commercial banks got themselves into a pickle because they didn't understand what they were doing, but that's a separate argument. So basically, if we take a look at it and you're a nanomaterial supplier, what can this exchange do for you? And there was a comment made that a lot of the smaller companies that set up to produce particular nanomaterials, they couldn't gain any economic traction. The reason is they didn't have a market. They didn't have access to a market. And what the exchange is going to do is it's going to set industrial specifications across a broad suite of engineered nanomaterials. We've identified 11 thematic classes as opposed to the 14 that the OECD has identified and so forth. And that market is basically going to be open to any nanoproducer, regardless of what size, in terms of financial size they are. If they can supply to the exchange's specification, then they are welcome to participate and supply into the market, as long as they adhere to the rules of the exchange and obviously the standards rules associated with the exchange. The other side of the coin is the exchange process gives one fundamental benefit to suppliers, and that's trade financing. For example, you have an order and somebody's decided to buy $1 million worth of material. Those funds are already set aside, they're already pledged to the trade. So therefore, you can go into your bank and you can get trade finance based on probably a couple of points over LIBOR or whatever, because you know that you've already been paid for the order, whether that order is 3 months hence, 4 months hence. The London Metal Exchange does it every day of the week, the metals market, for example. That is a major, major plus point. For a small manufacturer, it gives them the ability to compete in the first place. That obviously, if they need to employ more capital to upscale resources and so forth internally to be able to meet an order, then they can certainly do so. And the ability to access trade financing helps them do that. It also enables the wider nanomaterials community to plan. It enables you to develop a sense of what is gaining economic traction, what raw materials or secondary commodities have got an economic value, where is the economic interest. And obviously you've got trade assurances that you're guaranteed to get paid, and you're guaranteed to get the material and so forth. And you've got access to networks. And that's something that the exchange is trying to develop, has considerably advanced, is networks of professional excellence and equities within the professions, for example. There's a section on the professions that we're going to talk about later on. And I'm talking about accountancy, law and so forth, etc., and management consultancy. And the ability to submit specifications for listing. If you're a large producer, if you're a buyer, for example, there's nothing to stop you submitting your specification for trade to the exchange, and you can supply that as a principal member of the exchange. It happens every day of the week in most of the major markets. They usually call it a branded. It's a branded commodity by the London Metal Exchange, or it's a branded commodity by the American Chicago and so forth. The other side of the coin is global and regional contracts. What do we mean? The world economy isn't uniform, ladies and gentlemen. There are disparities between Asia, Europe, the United States and so forth, and that can be a whole variety of disparities, whether it's standards, internal regulations, or it can be basically price and quality issues and so forth. That's what global and regional contracts are used to do. For example, we're taking a look at carbon nanotubes at the moment, and obviously there will be particular regional contracts in carbon nanotubes, probably based in North America and Europe, and obviously there will be a global contract in probably the lesser, the multi-walled variety of carbon nanotubes. And for example, that's something that is giving manufacturers and end buyers more flexibility. It's the ability to trade, for example, in dollars if you're a US company, or in euros, or in Japanese yen, or whatever, right? And another aspect of the coin is the ability to be able to hedge your currencies. For example, if anybody's been following what the dollar's been doing to sterling and the euros the last 3 to 4 months, you can certainly realize the implications it would have in your business model. I mean, for example, there's been something like a 30 to 40% appreciation in the value of cable against the dollar over the last 3 to 4 months. And you can't say that that devaluation doesn't affect the business model, particularly when you're trying to operate on an expected margin of maybe 10 to 50%. If 30 to 40% of your profit margin is eaten up through currency exposure, then I think the next stage you're probably going out of business. I mean, if They're absorbing costs like that. So the exchange gives the ability to hedge from the outset. If you know you're going to sell something in 3 months' time, then you know what your currency exposure is. You know the Japanese supplier is going to be paying you in Japanese yen. You can unwind the trade. You can use what we call forward, which is a forward currency trade. You're guaranteed the payment because it's going through the exchange process. You're not going out on a wing and a prayer. So that helps you to plan your issues. The other aspect, gentlemen, ladies and gentlemen, is a compliant industry voice. Nanomaterials, nanotechnology doesn't have an industry voice. It doesn't have somebody who's prepared to turn around to a national government and argue your corner. It doesn't have that. It's got lots of trade associations and so forth, but they're so fragmented. For example, you've got umbrella trade associations. You cannot tell me that a manufacturer of titanium tin dioxide has got really a lot in common with a manufacturer of carbon nanotube. Both are two distinct commodities. They've got distinct applications. The only thing you have in common is the fact that they're nanomaterials. You need more specific industry voices to be able to talk to government, to be able to talk to national regulators, and basically say to them, look, this is what industry is doing, this is what the commercial world's doing, now go and do your job and legislate around it. They don't have that at the moment. And also the ability to trade anonymously. When you trade on a stock market or you trade on a commodity market, you trade anonymously. What the exchange does is the exchange reports the price, the commodity, the time of trade, and the volume. If there's an investigation, what happens is a national government or a regulator submits a subpoena to the exchange in question asking for disclosure. The exchange doesn't disclose who the counterparty to the trade is in advance. There's certain distinct procedures in place to protect the integrity of counterparties. And short of there being any wrongdoing or illegality, then the exchange will not reveal the counterparty to a trade, unless it's ordered to do so in law. And that's something that related to, for example, DEFRA's attempt to get a voluntary reporting scheme up and running. I mean, a lot of nano producers didn't really embrace that for a variety of genuine reasons. And they felt that it was too complex, they were prying too much into their business, they were worried about intellectual property, etc., etc. So what we're actually discussing with DEFRA at the moment is how the exchange reports to DEFRA the price of the transaction, the volume of the transaction, the material it's in, the country of origin, country of destination. And that could basically solve the problem that DEFRA have had for the last 10 years in trying to figure out a reporting structure. So what's the benefits to purchasers? We shouldn't underestimate what purchasers do, ladies and gentlemen. If I'm going to make something, if somebody's not going to buy it from me, there's no point in me making it. I can say to myself, okay, I'm making a new material, and that can command $300 a gram or $400 a gram. But if I cannot convince somebody to buy that material, then what I'm doing is a wasted endeavor. Right? So basically, price discovery is one of the key functions for a purchaser. They can see the price. They can also plot the price. I mean, when I worked as a professional trader, what we used to do is we used to do a thing called technical analysis. Technical analysis was basically the studying of chart patterns, using things like Fibonacci retracements, moving averages, and so forth, to basically be able to predict where the price of a stock or a commodity might be in 6 months' time. It's a very professional science, ladies and gentlemen. It's not something that you pay people a couple $100,000 a year to do chart analysis up in the City of London. And despite what you think about many of the commercial bankers, there are some quite clever people up there who know what they're doing, believe it or not. So, price discovery is very important. Trade integrity is important. Familiarity. Boeing, for example. We heard a comment about Boeing this morning. I mean, Boeing are used to using commodity markets. They use it every day of the week for aluminium, one of their major raw materials. They probably buy aluminium forward 3 to 4 years. They're able to do that. They're able to do that through the Mercantile Exchange in Chicago.